Ladies and gentlemen, it's that time of the quarter again where we do our quarterly predictions for SoFi Technologies. This time, Q2 of 2025, and these are the results. Jumping right into it, what we can see here is Q2 of 2024. That's our year over year comparison, Q1 of 2025, and then everything in between. In this darker blue is my predictions, along with the circled in dark blue are the exact predictions that I'm making. Everything else is a formula. Okay, so I'm assuming 840,000 new members for SoFi Technologies. That actually leads us to 1.2 million new products based on a product per user assumption. Okay, so as we go down, that's exactly what we're going to have. We're going to have few assumptions, but based on data that we're end up seeing or results that are coming out or comparisons from different companies that have more data that we can end up seeing that is in similar sort of positions, like Upstart, for example, seeing amazing success here in Q2. So this is how we're pulling a lot of this data for these assumptions. Okay. So first up with Q2, 840,000 members. This is mainly taken from SoFi's traffic. Okay. Website traffic and app downloads looked extremely strong this quarter. Plus, they are on track to do roughly about 7.7% growth going forward, as getting as low as about 7.5%, but somewhere in that range of 810 to 850,000. I'm being a little bit more bullish because I think that there's going to be a lot of loan platform demand. And whenever that happens, they're going to be spending more on sales and marketing to fulfill that demand. So 840,000 is my bet. That would be an all-time new high from SoFi and actually looks something along this line. Total members actually reaching 11.765 million. Now, the only thing I didn't try to determine is the amount of customers that churn away from SoFi. Maybe that'll be another 20,000, 25,000, something along those lines. That's going to happen every single quarter. So maybe the actual end number that we end up seeing is somewhere around 820, maybe as low as 800,000. That being said, total products adding 1.2 million, that's going to be another record high. A large percentage of this, 1.1 million of that coming from financial services, and only about 125,000 products coming from lending. Now, that's still a record high 125,000 products, which still should look very nice. Up next, we have the financial services products to lending ratio. This is very important. Okay, 86.85%. This is going to continue. The only reason why it's really important to point this out is it might determine how our average revenue per user is counted. Okay, if a lot of members are coming on for checking accounts, Relay, Invest, obviously SoFi makes less money doing those types of products than they would signing up someone to have a brand new mortgage or a personal loan, things that make back a lot of money immediately. So it's also important that we see products per member. This has actually started to accelerate last quarter. SoFi's management has said that they're on the right track and they're seeing signs for that to increase. So I think that that's going to continue up to 1.46 products per member. Technology platform, 750,000 new ads. This is after dropping off 9 million. Okay. So after dropping off 9 million, which is essentially closer to 15 million, because we usually add about 7 million per quarter, to get negative 9 million is actually closer to like getting negative 16 million. Okay. That was Chime dropping off. That's perfectly okay. Unless there's still more to drop off in Q2, I think we're going to return back to the normal 7.5 million from customers continuing to add on, customers like Robinhood continuing to add more customers onto their platform. We should see a return to normalcy there. In terms of how much money SoFi is making, what we end up seeing is adjusted net revenue of $835 million, up 8% quarter over quarter, but most spectacularly, 39.92% up year over year. There's a good chance that I could have been a little bit too conservative in a way, or maybe not conservative enough on the negative 40 million of corporate revenue, or potentially technology platform comes a little bit higher. Maybe there was a single deal that was closed that would bring on more money to SoFi. We could actually see our first quarter where we have 40% year over year growth in a very, very long time. So this is also why the market's getting extremely bullish. And, SoFi passed $21 today. So all is lining up for those types of valuations to actually make some sense if we're growing at significantly faster rates than we have quarter over quarter or year over year. Now, financial services revenue is going to hit another all-time high, 335 million, and lending going to be 437 million by my estimates. The actual product per lending revenue is going to go down just slightly, okay, because I think that a lot of products are not going to be held directly by SoFi, and more of those products are going to be in different style products than just personal loans, okay? This is going to be more student loans, more home loans than usual, products that don't pay out as much immediately. Okay. They have longer lifetime value, especially in the home loans, than personal loans would. But in terms of immediate revenue gain, it's not quite as high. Technology platform, still very disappointing to some degree. It'll be sort of flat revenue the whole time. Now, we haven't really seen a quarter over quarter decrease in quite a long time, but this time I do actually think it'll probably be almost stagnant completely. So, what does this look like? Well, the technology platform hopefully returns back to some normalcy, maybe won't even pass their highest from 2 quarters ago. Adjusted net revenue will continue to grow along this path of significantly linear quarter over quarter growth. And in fact, maybe even ticking up a little bit faster. You can see it in the orange for adjusted revenue year over year. Okay. For lending, what we end up seeing is a continuous increase up to 28% year over year growth there. Things are getting much, much better. And remember, that makes up for the large bulk of SoFi's overall earnings. And financial services, although it is decreasing, it's decreasing to 90% year over year. Nothing to complain about at all. So all of that looks very, very exciting. 90% still for financial services is what I'm expecting. Contribution profit. Well, this is another interesting part. I'm expecting about $450 million of contribution profit at a 53.84%, by far the highest they've ever seen, holding up just slightly more on financial services. It could even climb even faster than this. It's just how much can we get out of financial services? I mean, they've made so much money on the loan platform business. Potentially that's going to continue and increase the contribution profit even more. We could, like, very realistically see over 50% contribution profit, but it was just such an unbelievable number. I couldn't bear to write it down, but absolutely we could see this. 58% on lending, absolute possibility, and 31% is actually pretty conservative for the technology platform. I'm just being a little conservative because it's been a little bit rocky recently. So this is actually a very conservative estimate, 450 million. After taking off some pretty easy adjustments here, I'm not trying to make any significant assumptions. What we end up seeing is adjusted EBITDA come in at $233 million, up to a 28% margin, which would be essentially a 70% increase year over year or 11% quarter over quarter. Both are absolutely significant. For net income, I'm expecting a 10% margin, $83.5 million of net income, which leads us to 7 cents of EPS if we continue a small amount of dilution on the company quarter over quarter. This shows adjusted EBITDA finding absolute way higher highs than what we've seen before, higher margins, 28%, and adjusted net income hitting another very high, but not as high as what we saw in Q1 of 2024, but that's perfectly fine. We'll get there soon. And by the way, SoFi's guidance is saying that we're going to get about $795 million in revenue, where I actually think it's going to come in $835 million. That's about a $40 million beat or 5% surprise on revenue. For EBITDA, they're expecting 205. I'm expecting 234 million, which would be a 14% beat or nearly $29 million. For net income, they expect 65 million, and what I'm expecting is 83.5, a 28.5% beat. Whenever you compare it to the other quarters, this actually is not a significant beat. I mean, we've done more than 10% beats on revenue just in recent history. For EBITDA, it's also right in line, if not even more conservative than what we've seen on expected EBITDA. And then for net income, we haven't seen a lot of quarters there. But like, for example, last quarter, we beat by, 103%. The quarter before that, 56%, 48%, 42%, 132%, 28% would be the smallest beat that we've seen. So I actually think that I'm being quite conservative in my numbers here. Now, to understand how I do this to make sure that there's any level of predictability in the accuracy that I'm able to predict their outcome, I do sort of a sum of the parts analysis where we look at all of the products that make up for their actual revenue, EBITDA, net income flowing all the way down, right? And we tried to determine the actual use of those products and then the average revenue per product. So here's my Q2 product predictions. Let's go all the way down into an individual product base. First off, personal loans. Personal loans, I think, are going to be another record smashing quarter. We have the loan platform business, the actual appetite, and the different products that they've put out for personal loans are going to increase that appetite. 104 to 105,000 new personal loans would be very, very exciting. Okay. I think that also the originations per loan is going to be very average, about 55,000, but this is going to be a stellar quarter for personal loans. Home loans. This is going to be stunning. By far the highest we've seen in a very long time, 3,700 ish new home loans on a mixture of both actual purchased home loans and HELOCs and different products that actually end up lowering the origination. So before we used to have, 300,000, now we have 187,000. It's not because people are buying $187,000 homes, but there's different products in the home loan space that fall under this niche. But this product has been accelerating very quickly, and I think that they're going to push that to new heights. Every piece of advertising that I've seen from SoFi had to do something along the lines with home loans. If we actually go over really quick, we can see personal loans right here hitting another new high. And then home loans also, you can see how it stagnated quite a lot here into a much faster acceleration, actually hitting the fastest quarter over quarter growth that we've seen in quite a long time. So very, very good look from home loans. Personal loans doing well also. Next, we have student loans. This is going to add about 16,000 new student loans. Nothing too crazy, but overall, it will make up for a decent percentage of outstanding products, and the originations per product will be very average, 71,000. Okay, nothing too spectacular on the student loan side, but they don't really have too many catalysts that are going to push that into new extremes like they have in recent quarters. SoFi Money, on the other hand, very, very exciting product. 456,000 new product ads. We're going to see our total deposits get all the way up to $29 plus billion, potentially even $30 billion. And the deposits per account is going to pass 5,000. These are my beliefs right now. You can see that here and how fast this has been growing. 8.3% quarter over quarter change. And for student loans, just roughly in the middle there, 2.8%. If we flow even further down, we can see SoFi Invest. This is their brokerage product. Very quick quarter. They've been doing a lot of work here, and they said that they were going to push it on the other side of 2025. I think that acceleration is going to start now and ramp even further in Q3 and Q4. Okay, so 15% of total outstanding products. Very quick growth quarter over quarter. Credit cards, another one. This is finally hit an inflection point. You can see here 6,000 new ads, all the way up to 14,000, now hitting 28,000 new credit cards. This is going to be a very big product for them. Very, very excited to see what they do with credit cards. In order to visualize that, we can see here about 7% growth on SoFi Invest, hitting new highs. And then the credit cards also hitting 9.2%. There was just this one spike where they really started to outlie some new credit cards, or else you'd really get to see how fast that credit card ramp is really happening. You can see here how stagnant it was, and then a re-acceleration in the last couple of quarters. Very exciting. Okay, and then let's just do the last three all together here. Referred loans, this is going to be another exciting one. I actually thought it was going to slow down as the loan platform filled in a lot of those things, but that's actually not the case. The more customers that come onto the platform, the more need for a wider credit box. So not only will SoFi originate their own loans, will they also sell them off through the loan platform business? But also, there's going to be a lot of demand that doesn't flow through either one of those channels, but actually goes through Pagaya, which is referred loans. Okay, big product, 20,000 plus. Very exciting. SoFi Relay, SoFi Insights, whatever you want to call it, another 400,000. The interesting thing about the growth here, because it does look like we've already surpassed this, why would we slow down growth? But Relay, what we've noticed is that the growth kind of comes in these waves, and that they'll find massive amounts of gains and then sort of slow down a little bit. We started to see at the very, very end of June that they were doing a promotion for Relay, offering a sweepstakes product. If you sign up in an external account, that you can enter to win $20,000, I think it was. But that was right at the end of the quarter. Where I think Relay will actually grow is more into Q3. And then SoFi at Work, their sort of external student loan product, will do well, but not as fast of a ramp as what I thought it would do. 6,700 new product gains. And this is what it looks like. Referred loans taking off as the rest of the loan platform or loan business is doing great. By the way, referred loans falls under financial services. SoFi Insights also growing very quickly. And then at Work also continuing that rise higher. So congratulations to those people who have held through even Q1, bringing this stock down below $11 a share to now actually seeing a double in the last 3 months. I mean, it's been absolutely spectacular. Even if we look 1 year out, that's more than a triple in the actual stock returns for SoFi, hitting prices that I've never even seen since holding this company. So congratulations to all shareholders. And I'm going to continue to hold, maybe write some covered calls if we see the stock get a little bit extended. But aside from that, I'm here for the long term. Ladies and gentlemen, thank you all so much for watching. Make sure you hit the like button, maybe subscribe, but bye for now.